Have you ever wondered why some people get approved for loans easily while others struggle? It all comes down to creditworthiness. At its simplest core, creditworthiness is just a measure of how likely a lender thinks you are to pay back the money you borrow. The most common tool for measuring this is your credit score, which usually ranges from 300 to 850. Lenders look at your history of payments, how much debt you carry, and how long you have been managing your accounts. While your score is a big part of the picture, lenders also consider your income and employment stability when determining your true creditworthiness. Higher creditworthiness often leads to lower interest rates on loans, which can save you thousands of dollars over the life of a loan. Building a strong reputation with lenders does not happen overnight. It is the result of consistently responsible financial habits. Thanks for watching. Understanding these basics helps you make better decisions for your financial future. See you in the next video.